Looking at the markets here, red and green on the screen, and we've got about 80% of the S&P 500 has reported already. Shana Sissel joins us here, founder and CEO of Banríon Capital Management. Shana, thanks so much for joining us. Again, we kind of about 80% of the S&P 500 companies have reported some pretty darn good earnings. Is it enough to continue to push this market higher, do you think?
I think so. We've seen some soft economic data, so I have some concerns. But I think if the Fed is more inclined to hike than cut, that's an indication that the economy is pretty strong. GDP came in better than expected, and I think the consumer is held up okay. So I think the stock market can continue to grind upwards. I don't know if it's if I want to not be prepared for volatility. I think it'll be more volatile on the way up, but I'm positioned accordingly. But I'm not defensive.
Got it. Okay, how are you thinking about bonds? We saw this tremendous sell-off at the end of last week, sending yields at the long end to multi-year highs. They've calmed down as so far this week, although we're seeing them start to creep higher once again. Is the direction of travel just higher yields?
Yeah, I think it is, and I think that's exactly what Chairman Warsh wants. I think he wants the market to dictate these types of things, borrowing costs and things of that nature, and not necessarily be as reliant on the Fed to make those decisions.
So you mentioned the Fed here. I mean, the Fed chairman, I don't think he's going to change his tune. Maybe some folks are going to be looking forward to Jackson Hole to maybe get some more information, but do you feel like this is what we have? We've got a Fed that's going to keep a tighter lid on guidance and just communication in general?
Yeah, and I don't know that I think that's a bad thing. I actually think that that's probably a good thing. The market's become far too reliant on the Fed to be completely transparent and really dictate ahead of time and be and allow the market to rely on them to kind of buoy equities. And I don't know that that was the best thing that has happened in the last 20 years. I think that there was a time where the Fed was able to do cuts, make decisions and things, have meetings off cycle as needed, and was able to use the market as a key data point. But because the market has been so reliant on the Fed to communicate visibility so far in advance, it's taken the market data point and investor sentiment kind of out of the Fed's toolkit as a way to kind of assess the economic conditions. And by being more tight-lipped, I think the Fed now is in a position where they can bring that data point back into the things that they look at when they're making decisions about monetary policy.
Shana, what did you think of the Treasury's involvement, the U.S.'s active involvement in the intervention of the Japanese yen to keep it from weakening further as a way to ensure that there won't be any spillover into the U.S. Treasury market?
I think it's an interesting move. I don't know that I love it. I don't know that I love cross global monetary policy decisions, but in a way, sometimes the best monetary landscape is one in which we have cooperation across the globe. And so I don't love that we were so involved. I think just being able to be transparent and to have input and insight into what's going on in other countries is a good thing. I don't know that getting involved in other countries' monetary policy decisions is something I like seeing so much.
All right, Shana, thanks so much. Appreciate it. Shana Sissel, she's a founder and CEO of Banríon Capital Management here, based in Chicago. Let's get back to the tech space, because why not? You can't stay away from tech very long, because that's what's driving the bus here. I noticed at Google, which some people call Alphabet, they've had some changes in some of their AI management ranks. I was told by a guest from Franklin Templeton, who does a lot of this tech investing, don't worry.